Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of this week's biggest stories in the mining industry. If you enjoy this video, don't forget to hit the like button, subscribe to our channel, and of course, leave us a comment below. Let's get into it. Well, I don't think I'll ever get tired of saying this. We're wrapping up yet another historic week for gold and silver, with both precious metals setting new price records. Gold broke through $4,200 per ounce and then continued on past $4,300, putting its year-to-date gain at about 67%. Meanwhile, silver passed $54 per ounce and is now up around 84% since the start of 2025. Gold's underlying price drivers are no secret. Factors like central bank buying and waning trust in fiat currencies have been major themes in recent months and years, and they continue to provide support. But it's worth looking at a number of other elements currently in play. Among them are a resurgence in the US-China trade war, which has ramped up geopolitical tensions, and the ongoing American government shutdown. The closure has stalled the release of key economic data ahead of the Federal Reserve's next meeting later this month. There have also been troubles at two regional banks in the US. They say they were the victims of fraud on loans to funds that invest in distressed commercial mortgages. Aside from that, I heard this week from Rich Chekin of Asset Strategies International, who noted that Western investors are now starting to enter the market. Here's what he said.
Yeah, so I'd say still we have a little wave. We don't have a tidal wave or a tsunami by any stretch of the imagination, but the Western investors getting back into this. And I know this as a dealer because when we buy and we sell, and for the past few years we've been doing a lot more buying than we've been doing selling. The only selling we've really done has been to a handful of high net worth folks who are really unaffected by the economy day to day, or by individuals who were looking for deals. And every time somebody sold, we said, hey, would you like to buy some metal a little cheaper than I could normally offer it? So those were the kind of sales we were doing. Now we're having flat out sales. People are calling me up and saying, okay, I should have done this a long time ago. I see the light. I'm ready. I'm jumping in the water with a big toe or something, So people are now buying metals.
Rich also weighed in on where gold is at in the current cycle, saying that he tracks a variety of indicators, including the gold-silver ratio, interest rates, and the US dollar, and none of them are telling him that the market is topping. This is how he explained it.
Yeah, so they can take a breather. There's no question about that. I almost kind of want them to, but the reality is there's no top in sight, Charlotte. So you recall, we've been doing these interviews for a while now. I remember saying, at $1,800, almost at all-time highs, gold is dirt cheap, silver's cheaper. And then at $2,400, gold is at all-time highs now, silver is nowhere near it, gold's cheap, silver's cheaper. $3,000 beginning of this year, gold's at all-time highs, silver's not. It's gold's cheap, silver's cheaper. And every time somebody would come out and say, I'm waiting for the pullback, I think it's overdone and all this other stuff. The reality is nothing in the fundamentals suggested that it should go lower. Nothing in the fundamentals suggested it should not go much higher. And that's what we're getting. I've got about, 7, 8, 9 different indicators I look at for the top in a bull market for gold. None of them are firing.
When it comes to silver, the situation is a little more complicated, and I highly recommend checking out my recent interview with Vince Lancy of Echo Bay Partners for a full rundown. Essentially, he explained that the London silver market is facing a liquidity crisis. While there's not a shortage of the metal, it's not in the right place, and that's creating a squeeze. This is what Vince said.
London, when it needs metal, has having a hard time getting it from Asia because China's not cooperating with the West for good reason in their mind. And for some reason, the US is not making its metal available as robustly as it used to help refill London's coffers. And so that creates a short squeeze. So there's enough metal in the world for current needs, let's say, for today's needs. But it's not where it should be. So it's a dislocation. And London is saying, hey, I need to buy silver. Can I have some of yours? And the US is saying, no, it has to go higher. China is saying, no, it has to go. I mean, we're not saying it has to go, but it has to go higher. It's like, it's not available. It's not for sale. I'm not going to sell you my house.
Another key point he made was that although these circumstances are front and center now, it's just one part of the larger ongoing bull market for silver. In his view, its growing status as a critical mineral will have major implications, and a triple-digit price is realistic. There's a lot more to it than that, and again, I definitely encourage you to watch the whole interview with Vince if you want a more complete explanation. We'll wrap it up there, but if you'd like to hear more from me, I was recently interviewed by Chris Marcus of Arcadia Economics. It was fun being on the other side of the camera for a change, and I have a new appreciation for everyone who sits down to answer my questions. I'll leave the link to my interview with Chris, as well as the interviews with Rich and Vince in the video description. Take a watch if you like, and please drop a comment below if there's anyone you'd like to see me speak to. There's no question that we're living in interesting times, and I always want to help you understand what's going on so you can make the best decisions.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.